with us, that we're not looking at credit. We're not looking at income. We are looking at the asset, and we're looking at your ability to get from beginning to end. And what does ability look like? One is character. I want a person that will pick up the phone when something's hard. Like when it gets hard, call us, let us walk you through. So that's one. Number two is being able to know that you have the resources enough to get from the beginning to end. If there's a little something a hiccup that comes along, how are we going to solve that? You're going to pull from other resources. And then experience-wise, that's the tough one. You can't get that without starting. Right. That's where we're going to help. That's where our experienced guys are able to help you through it.
You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
AZREIA, and the great state of Arizona. How are you guys doing today? Today, we are going to have a very special guest, and we're going to be talking about money. So I am Marcus Maloney, and this is my great co-host,
Mike Del Prete.
And we're here with David Nielson of Boomerang Capital, and we're going to talk about funding. So strap on your seatbelts, get your purse strings drawn. We're going to open up the purse strings and let David talk about some money, see how we can get some of these fix and flips done, landlord deals done directly for you guys. So David, welcome to the show. How are you doing today?
Hey, doing great. Thank you for having me.
All right, great. So Mike, man, it's a great day today, man. You want to talk about some money?
Of course I do.
David, you want to talk about some money?
Man, that's all I love talking about.
All right, so let's jump right in. Let's talk about money. First off, Boomerang Capital. How did you guys get started, man?
You know what? Boomerang Capital Partners started at the beginning of the recession. There was a demand, a need for being able to finance those foreclosure properties. I got started by first coming from the lending world and being able to lend money to Boomerang Capital Partners. And it just made sense to kind of come over, partner up, and grow it to the size and what it is today.
Okay, look, that's money on the line right there. There it is. That's money on the line.
That's right.
So you had you said you joined with Boomerang. So did you have your own fund, private, or what were you doing?
No, so I was working for the bank, and the bank said, hey, we want to lend money at a higher interest rate, but lower risk. And so I found hard money. I started lending to hard money lenders, and Boomerang was the one that I had a good relationship with. And I was going to go start my own. They had a little breakup between the ownership. And so I came over and partnered up and really started it back up at that time. So yeah, we've been, ever since we've been growing and at a quick pace and just trying to help everyone out, one house at a time and be able to finance these communities. So.
Okay, sounds great. All right, David. So you've been with Boomerang Capital Partners for a while. How is my first question is, how is the change in the market associated with the interest rates going to affect all of us as borrowers?
That's a big question out there. And we personally, we have a crystal ball at our office, and so we use that all day long. But
great.
So telling you what the crystal ball says, we don't think it will affect us much. As investors, there's still opportunities. There is a tremendously high demand for properties, and we're lacking the supply. So So where do you go find those properties? Either A, you got to go build them, or B, the one that we love the most is being able to fix up the old homes that we still have a lot of, of the older generation that's moving out, that's going out to Sun City, that's being able to downsize, but nobody wants to fix up a home. Nobody wants to live through working on their home. So you got to come in, you got to fix it up, turn around, sell it. And you know what? The great thing is the market justifies the new values. So, and it will continue to do it. So we think interest rates will come up a little bit this year. We don't think it will affect the hard money world. We think we're already at the rates that we're going to be at. And so we'll just keep moving along. It's going to be a good year. That's okay. Once again, that's our crystal ball. That's what we're reading.
There we go.
And so when, when the news and everyone's talking about rate hikes, that's just more for the primary lender, owner occupied, long-term, going from 3.2 to 3.4 kind of thing, right? Okay.
Yeah. And here's the deal. As that rate goes up, almost every 10 bips, so every 10.10% that goes up, you lose a buying power of about $10,000. So when that goes up 1%, you've lost $100,000 worth of buying power. So that will shift our market of what you're buying. Like if you want to buy a $400,000 home, you may end up buying $300,000 home in the future, which good luck. There aren't any of those, but
Yes,
Yeah,
that's what I'm
good
saying.
luck.
That I wonder if that can be an issue, because if what's our average home price now? And 4.5, maybe.
yeah, just above. And so, yeah,
4.25.
it's up there.
Yeah, man, it's just steadily going up. So yeah, man, if the interest rates, if you could barely buy a house for 4.5, and the interest rate goes up and it knocks everyone down to 3.5. Wow, very interesting.
So where do you go? Well, how many times have condos converted apartments and been back to condos? I mean, to be able to watch apartment complexes, that's the hype right now. But if they're able to sell those condos that they built or they're owning for, $125,000 a door and convert them to condos and sell them for $200,000 a door, we're back in the market, right? So I think there's a lot of play in the market always to justify that, and so it will be condos, right? The low income's or lower purchase prices are gonna go to the condos.
Do you think we'll see the condo conversions again?
I think so. I really do. I mean, you gotta have inventory, I mean, there's a big group that doesn't want to own a property too or own a house, but those that do, like they'll be that convert. It loves to convert.
Very interesting, because when the condo conversions happened last time, I wasn't in the business yet, so to speak, but with our low supply of even rentals, right? So if people are turning those rentals into ownership, that just makes it even more of a strain on the market.
It does.
Wow.
It does.
So many angles to look at.
It is. It really is. So looking at that, what about inflation? Kind of where are we at hedging that inflation in its totality with the market and interest rates and everything like that? Kind of, let's go to Boomerang's crystal ball. What are we looking at? What are we seeing?
Well, hey, here's the deal. We love to say that inflation is X percentage right now. People are saying 7, people are saying 12, wherever you want to say it. Inflation's up there. It's high. Here's the deal. The government in general is going to try to slow that down. They have to, right? They're going to pull money out of the market. Things will start changing. However, what is really inflation? We sold a building. So we're a commercial buyer as well. We sold a building 2.5 years ago that sold for $14.6 million. Just 2.5 years ago, just the other day, it just resold on the market for $26 million.
Wow.
So where's inflation?
Where's your crystal ball?
Yeah. Hold on to
it was turned off that day, So I mean, here's the deal. Inflation's out there. It's going crazy. It's just market prices. The problem is there's an amount of cash in the market that we've never seen. And so there's an ability to buy where investors will pay more for a home than a homeowner. That's never been the case. And so we're in a shifted market that we're trying to figure out. And so inflation will continue to go a little crazy. It'll be hedged by the interest rates. It'll be hedged by money being pulled out of mortgage securities and stuff. But in the end, we're going to keep going up. I mean, there's too much cash to not go up.
Right.
Wow. So let's take it a step back. So here at AZREIA, we have all types of members, from brand new, barely know what real estate is, to seasoned investors with hundreds of houses. So I'm new to AZREIA, and I got my eye on a potential flip. I'm looking for it. How do I work with Boomerang? What do how do I approach you? What do I say? What do I need? What goes on?
So the secret sauce of Boomerang is that we have loan originators that are out in the field. They are experienced investors, experienced flippers. They know the lending world. And so they're there to help you. And so the difference between us and anyone else is you pick up the phone, you get us on the phone. We will walk through that purchase with you and make sure it's a good purchase and make sure it's one that's going to make you successful, because our goal is to make sure you're successful. And so any one of them you pick up, Andrew Banks, one of our loan officers, he's done over 200 flips himself. Wow. Francisco has sold hundreds of properties. I mean, these guys know what they're doing. And so, like I said, get us on the phone. Let us walk through the deal. Within an hour, we'll have numbers in your email, being able to review them, make sure what your whole financing will be from beginning to end. And once again, don't look at rate and term or rate and fees as much. Everybody's throwing out a crazy low rate out there, but we want to give you the exact rate you're going to get. There's no changing it after that. Right. And we want you to be able to be successful and know exactly what it's going to be from beginning to end so that you can get through that. So yeah, pick up the phone, call us, let us walk through the property with you and figure it out.
Okay. I know that was one of my fears when I got started was like, okay, I know about hard money. I know about private money. Will I qualify? You know, especially since never done a deal. You know, they always, most lenders say, okay, well, send us your portfolio where you've done, you know, 3 deals in the last year, so on and so forth. What about, like Mike said, that investor that just, hey, I'm looking to get started, but I believe I have an awesome deal. You know, me and Mike vetted the deal and looked at it, ran the numbers, and the ARV is high compared to what they're going to get it under contract for. What do they need to bring to the table in order to get funding?
Yeah. So with us, that we're not looking at credit. We're not looking at income. We are looking at the asset, and we're looking at your ability to get from beginning to end. And what does ability look like? One is character. I want a person that will pick up the phone when something's hard. Like when it gets hard, call us, let us walk you through. So that's one. Number 2 is being able to know that you have the resources enough to get from the beginning to end. If there's a little something a hiccup that comes along, how are we going to solve that? You know, you're going to pull from other resources. And then experience wise, that's the tough one. You can't get that without starting.
Right.
That's where we're going to help. That's where our experienced guys are able to help you through it. We do highly recommend going through a course, finding a mentor, someone to coach you through it. Between them and us, we feel like you'll have the right tools to get from beginning to end. Okay. However, it's not required. We'll work through it. We had someone call us the other day. So what do we do after we take the drywall off? And so, so already we know, like,
you money or
right.
So we, you know, we're there. We're going to help them through that. We want to make sure that they can get through this project, but you know, we're willing to work with the first timers and figure out how to get through the project together.
And what I like what you said, and we always push this on the show, is, you know, try to work with a service provider, whether it's hard money, insurance, accounting, that they actually invest themselves, right? To give you that edge on that perspective. So the fact that your reps, you know, invest themselves is huge. So it's cool.
You know, and that, I mean, we've run into a lot of problems, right? I mean, between number one, we lend 1,000 loans a year. We're looking at those properties. We're being able to help through and guide through those. So when problems come up, they're coming to us. We're trying to solve. We also will send a contractor out when needed to solve problems. But in the end, so we're seeing those in addition to, like you said, we're experienced investors. So we've got the knowledge to be able to help through it.
Perfect.
So what about, maybe tell us about a couple of your current loan products. So that's kind of working with a newer person, but like, so what do the products look like? Do you lend on renovation costs?
So is it, you know, do I have to have 30% set aside? You guys learn 70 for the acquisition and the rehab, kind of where are we at there?
So here's the deal. Our product is real simple. We will lend either 50 or 85% of your total cost. Okay. So 15% down, or 90% of your total cost, 10% down. And those are limited by the ARV to make sure we're at 70 or 75% of ARV. But in the end, that's what you're bringing to the table is that 10 or 15% of the total cost. So that's also rehab.
Okay.
Right. So if you're buying a house for $250,000, you're putting 50 into it. We will lend you up to 90% of that. So sorry, I'm thinking it through in my head, right? So 10% is 30 grand. That's what you're bringing to the table, in addition to closing costs from the title company, our fee on the front end. But yeah, so really ours is a really simple process, making sure you know exactly what capital you need to provide.
Oh, wow. So you lend on the renovations. Is there like the draws, or how does that work?
Yes. And that's where once again, our separation from everyone else, our draw process is quick, simple. Our goal is to get you from beginning to end. And so if we're holding you up, you've all done a draw before, right?
Yeah. Yep.
Have you ever submitted a draw and had to wait several days? Have you ever had to and not gotten the full amount of money from the lender? That's not us, right? As long as things are progressing and moving forward and within a tolerance, we're giving you that full amount next day. So next day it's in your account. You're continuing to rock and roll.
So with the draws, do we have to send over pictures so you guys know kind of where we at in the process?
Yep.
Okay.
So Boomerang Capital Partners, we're your partner. You're sending us pictures. We're not sending a third party to come look at it. So you're taking the pictures, sending them over to us. We're reviewing them. So that's why it's so quick to be able to get through that process. Now, it is a reimbursement draw. So it is get the work done and then we reimburse you.
Okay.
Versus front funding you for the
Front-funding.
rehab. Yeah.
Perfect.
Got it. Great. So I remember when you came down to the Phoenix Real Estate Club last week. But thank you for coming, by the way. You mentioned something about like lended a lot of money in March,
Mhm.
right? So with it being a low inventory, for your requests for hard money loans from investors, have you noticed that increasing, declining? Where's that at?
Yeah, so it all, like I said, it follows a cycle in the market. And so last year, so December started is a pretty even month. January is a pretty even month. February should be an even month, and then March is where we should see it take off again. It's that spring, man.
Mhm.
Everything grows. It's got to go. But yeah, last year, so it was tight. We're a limited source of capital, right? We're raising capital all the time, and so we were trying to bring in the capital to be able to keep up with the demand, and started calling other hard money lenders. We were all tight. It was just the demand increased tremendously. You know, the graph that you guys showed, the Cromford report shows once that flip sells, and that was in September, right? That's when that inventory hit the market. It took about 6 months. It
Mhm.
blew up the market. And so that's where you saw all those purchases for fix and flip hit the market and went on. So yeah, so I'm hoping March, April, we're going to see some crazy
uptick.
numbers and hit some new benchmarks. So
Oh, I'm sorry. Yeah. I don't know why I was thinking. I said March. You saw, you said something at the meeting that, yeah, but you guys are just hard to get money. Or
Mhm.
what month was that?
that was
Is
March. Yep.
Oh,
That was,
last year.
yep.
It
That was last year,
Okay.
March, because September is when we saw the
Got it.
after
Makes
effect
sense.
of it.
Okay.
Cool.
Yep.
Wow. So since you just said that, it makes me think, can people lend you money?
People
that a
can
whole
all,
nother
yeah,
topic?
no. Yeah. So we are a mortgage REIT. So
Okay.
we're an open fund. Accredited investors can come into our fund. They become a limited partner in amongst the 500 plus loans that we have on the books. And so they're able to make a great return. And
Okay,
I'm not
cool.
able to pitch
Right,
rates and
right.
returns right
Yeah,
here,
of
but
course.
hey,
Yeah.
they can reach out, and yeah, we'd love to talk to them about that. So
Cool.
Okay. So if you guys got some capital on the side and you're looking to place it somewhere, you know, Boomerang Capital is one possible place.
Yeah.
Marcus Maloney is one possible place.
I
And
got Prete
Del
too,
Prete
yes.
also.
all
So,
good investments, man.
all good investments, solid investments. So let me ask you this, David. What's next for you guys? As far as I know, you guys are raising capital and everything like that. You said that March is like you guys are looking for that uptick. When that uptick happens, who's usually coming to borrow that money? Is it experienced investors that you guys have already worked with, or who is it?
You know, our typical investor is a guy that does 1 to 8 a year. That's kind of who it ends up being our typical borrower. And then we've got a couple that are the bigger, you know, doing quite a few more than that. But, you know, here's the deal. Our desire is to really what we're trying to do is improve communities one home at a time. And the best way we know how to do it is through financing and be able to
Okay.
go through that. And so we're going to continue to do that and grow and do more here in the Valley. There's a huge demand here to continue to do that. We're still, even the new homes are being flipped now, right? So a 2005 home, it's still outdated, and a family doesn't want to move into it and take care of that. They want to move into it done.
Right.
So we'll continue to see those going on. We'll continue to grow, you know, on the horizon. You know, maybe there'll be an additional fund to be able to provide resources. One of the biggest things we want to solve is the BRRRR strategy.
Okay.
Everybody they use our product to buy the property, to rehab the property, but then the problem is, where do you get the takeout financing, and how do you get your cash back out of it? Well, there's a ton of resources, but none of them are perfect. And they don't close quick. And so we're trying to come up with a product that we can use, and then essentially we'll broker it out and sell it in the end, but we want to at least fund it quicker and get
Okay.
it done quicker.
So just so you guys know, BRRRR is buy, renovate,
Rent.
man, you're gonna have to edit this. Oh, man.
refinance, and repeat.
There you
know?
go.
Okay.
Yep.
I got it, Mike. I
I
got
know
it,
you
man.
do.
Don't worry. Don't worry.
All these new lingos pop up, just like buy it, fix it up, and just refinance.
Refinance,
Yeah.
right? Okay, so you guys are looking for a product,
huge.
looking to bring a product like that to the market.
The demand is out there. They want it. Everybody wants it. I want it. I mean, you know, for myself. And so right now there is a great loan that came out. It's called a DSCR loan. The benefit of that loan is it's now qualifying you based on the income of the property rather than on your income.
Okay.
So it made it easier, but it's still a rigorous process. And if we're already running our value on the front end, why can't we use that value on the back end to get this financing?
Right.
You know, just efficiencies. That's what we want
So
to
almost
accomplish.
like some small commercial financing.
That's
right
the hope.
there.
Yep.
Okay.
I can
Yep.
see how that could be a benefit, because one, you said DSCR.
Yes.
Or I always call them asset based. I don't know why. Is that
Very similar. Yeah.
okay.
Yep.
So if you could, because a lot of people are either paying cash or going hard money, and then all these obstacles you gotta go through. You fix up the property, then you gotta go look for a whole new lender. So if you could keep it all, get the hard money loan from you, and then knowing on the back end you can get us out of the hard money loan as well.
Then that repeat word, right? Just rinse, repeat. Just keep doing it.
Keep doing it.
Because for me, you're going to those national ones online, right? And there's they're good to work with. But yeah, I think it would be all in-house like that would be great.
Yeah.
Okay.
We all fit pretty close in the same model, right? We're not trying to do anything too crazy. We all just want to get our as much cash back out of it, go on for the cheapest price we can and keep moving, right? Until the hedge fund comes offers us way too much money to buy the property and then we sell it. Right?
That's right. That's right. Liquidate.
Yeah, I can see it being more efficient because there's a lot of fees when it comes to closing those refinances, man. Like you're talking $5,000 to $8,000 on a burr kind of thing.
It ticks it up. I mean, that is the hardest part, right? And so you get hit with the fees, you hit with time. So you paid interest rate, you're paying that high interest rate until you can get it done, right?
Exactly.
So you thought you were going to refinance 30 days, but now you're 90 days out still trying to work on it. So we want to solve that. That's our goal.
Yeah, let us know. Make sure to let us know here at AZREIA, man.
Yeah. Hey, we will.
Product.
Okay, let's take a brief break, hear a word from our sponsors. We'll come right back with Boomerang Capital.
A supporter of today's AZREIA show is AZREIA Business Associate, Boomerang Capital Partners. They're coined as the best flip-in lender, providing financing solutions to help fund your next fix and flip project. For more information, visit boomerangcapital.com.
All right, we are back with Boomerang Capital. And David, you were saying we just took a brief break. What's the whole goal of Boomerang Capital? Because anybody can raise a bunch of money and source that money and put it out into the marketplace. What is Boomerang Capital trying to do? Because, you have a lot of people that they want to tie the income or the revenue with a purpose also. So what's you guys aim?
Yeah, in the real estate market, demand that they have, we want it to be met, right? And so we want to make sure that houses are getting to the level that they need to. And so part of it is like, we want to be out in the community helping to do that. And one of the ways is just promoting people to be out there wholesaling, to talk about, real estate in general, to be figuring out what the real estate market is going on in their own community. Someone I spoke to this morning, they were talking about walking around their community and noticing houses that are distressed. They're like, I wish I can improve those. I said, well, make them an offer. Yeah. I said, once you get it under contract, then the game starts, right? I mean, you guys, that's you guys, right?
Yeah. Yes. We got a deal submission link too that they can go to.
So, exactly.
So what about like a wholesaler, someone that doesn't want to flip the house? Maybe they want to take it out, just throw a dumpster out front and clean it up and then sell it with like less than 30 days. Like, how's that affect the rates and the cost of doing the loan? Or do you do those?
Yeah, we do. Our loan does not have a minimum term. So we love quick turns, right? Okay. So we've got some guys that, are in 30 days and they're right back out and they're just doing them over and over again. We operate off efficiency. And that's like, if someone wanted to lend money like we lend, they just can't operate on that efficiency like we can, using lines of credit and different funding sources. And so we're able to do that and be able to make it so that you don't have to pay extra fees to go short term. But so we love the quick turns and being able to keep doing it. But in the end, the other thing is if they come across and they're a wholesaler and they come across a property, we are happy to market it out to our group. Our investors love when we have an opportunity and can propose and send it out to them as well. So it happens internally in our organization just to kind of create its own little demand every once in a while.
Gotcha. That's
love
good.
Love it. What else can we? So what about Denver? You're from there, or
you know what?
Kind of off subject.
Yeah. No. Yeah.
I was like, I know Boomerang's in Denver. You guys work with iCore and everything out there, so we're all friends. So I always want to know that Denver piece is always in my head.
I worked for First Bank. That was the first job I ever really had. It was working for First Bank, lending for them. They're out of Denver, Colorado.
Okay.
So that was my connection to Denver. I personally love Denver. I mean, come on, who can't love going skiing in the winter, and being able to have the beautiful weather in the summer, right? So it's a great place. But the other thing is, so our fund, we wanted to diversify it and have it be hedged by different markets. Okay. And the first market we went into was Denver, because if you look back, Arizona took the spike and then took the drop, right? Yep. And we know how that worked. Denver didn't drop. Denver kept going up. And so it just was a different model, and Denver's continued to go up and it's continued to grow. a lot of people love to talk about a bubble there. I mean, it's just been growing. It's been growing consistently. The next one we went into was Texas. And to be honest, if you look at Texas's history of values, it's a very boring graph. It's flat, right?
Yep.
And it's just kind of growing at a consistent level. And so we love Texas. We're lending there. And so we're wanting to be in those communities where we can help and grow. And so we recently went into Utah. That was our newest market. And then right now we're looking at the Las Vegas, Nevada market. And so, which, you know, it's close, it's quick, and it's very similar to our market. So that's why it took us so long to be there.
So the dynamic of the cannabis business in real estate in Denver, do you see any correlation with now that with Arizona? Because I mean, I didn't real estate spike in Denver because of that industry. So how do you think it'll affect us here?
Yeah, no, that, you know, it's funny. By being in different markets, we get to see indicators that happen later in other markets, right? So when the cannabis industry took off, we were in the Denver market and it was great. I mean, everybody started dumping the money into the real estate, buying them, improving them. They're buying higher end homes. Now it's not so much the cannabis industry. It's more just people moving in, right? You got California moving into the Denver market. You've got New Yorkers coming in. It's just a great area to be. Our new market that we keep seeing to show the indicators is actually the Austin market. It seems to be where the indicators happen, and then we see them happen everywhere else. When prices started going out of whack, it first started in Austin, and we saw it, and we're like, is this going to happen everywhere? And we started noticing, yeah, it's going to, it's coming. So the cannabis industry, I really think that the craziness of it and affecting the market, it's kind of it's involved in all of it right now. I don't think it's the main factor anymore. It's kind of just part of the deal now. We got a lot of money flowing, right?
Okay. How about here? Or you mean in Denver?
Here too. Yeah. Okay, I think here it's kind of the hype. You don't have all the people coming in just to be able to do it. You know, there was a bus tour company in Denver that you flew in, you landed, you hopped on the bus, and it was, you know, being able to get all the usage you needed. And then you got back on the plane and went home.
So now that it's opening up more and more states, it's less desirable to go fly to certain states.
That's right. That's right. So the travel and
that demand is more spread out. So
that's right.
Diverse. Okay. So, man, David, you gave us quite a bit today, you know.
For sure.
So how can we find you? How can we reach out to you if we want to look for funding?
Hey, yeah, please do. So I love giving out my cell phone. Call me, you know, walk through a deal, and then all my loan officers as well. So my cell phone, 480-993-5737. Go to our website.
Cell phone number? Is that the Batcave number?
All right. That's the money line right there. Give it to us one more time.
That's right. 480-993-5737.
Okay. And that's Boomerang Capital. That's David Nielson. Give him a call. You need some money. Give him a call. So
website?
Yep. Give us the website.
Boomerangcapital.com. And yeah, go to the website. You can apply for a quote there. It's really just getting us a lead and being able to start running valuations on your property, right? So yeah, please go through there. Call me, call into our office, you know, whatever. You'll find it all online. I mean, we're wanting to help you. So
yep. And you know, they're always at the Phoenix monthly meeting. He has him and his team has a booth there. They're there for 2-3 hours networking and answering questions. Always there to support you.
Come get a shirt. We always bring shirts there, right?
Okay.
The best flipping lender. That's our slogan. So
all right.
Yeah. So,
all right,
so come get a shirt
too. All right.
Okay.
Make sure to come out to the meeting, introduce yourself to David and his team.
All right, guys. So we're going to wrap up the show on today. David, thank you so much for being here. Mike, as always, wonderful co-host. And I'm Marcus Maloney, and AZREIA family, we thank you so much for being here, listening. Also, remember, go to iTunes, give us a 5-star review. You can like us on Facebook, Instagram, and then also follow us on YouTube. These shows are also on YouTube. So at AZREIA or Arizona Real Estate Investors Association, you know the handle. Just get out there, follow us, and get more awesome content. David, thank you.
Thank you guys. You guys are awesome.
Thank you.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Prete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.